Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com. In today's podcast, I wanted to talk about the KPMG banking scandals. KPMG had two banking scandals because they happened to audit both banks in the U.S. that went under, which is Silicon Valley Bank and Signature Bank. What made it worse is they signed off on these reports days before these banks went under. And what happened afterward is everybody is trying to blame KPMG for not catching this sooner. And they're saying, how could KPMG not have noticed that something was wrong? And KPMG came back and says that they did everything by the book. And KPMG has been auditing SVB since 1994 and Signature Bank since 2001. So they've been looking at these companies for a long time. And they signed off on SVB on February 24th and Signature Bank on March 1st. SVB collapsed on March 10th and Signature Bank collapsed on March 12th. So these are literally just days after they signed off and these companies got closed down. What makes this a little bit different than other scandals that KPMG and the Big Four accounting firms have handled is that these were bank runs. So these banks might have been in somewhat good condition before, or might have appeared to be in a somewhat good condition before this. But what happened here was the depositors started withdrawing deposits, and no bank can survive a run on their deposits. And at some point, banking regulators just closed down the bank before that every single person loses money or depositors lose the maximum amount of money possible. So I agree with KPMG in that they probably followed the principles that they were supposed to. Now, what they could have done is what they should have done is probably model some interest rate impacts on the company and saw what interest rate movements would have done to their portfolio of holdings. A lot of people are saying that these companies didn't hedge correctly or didn't invest correctly. So there's probably some additional work there that KPMG could have done to and maybe anticipate this, but I think KPMG probably did do what was right. It's just no bank can survive a run on deposit, and especially these banks, because a lot of these banks had high uninsured depositors, which means that they probably had a lot of large companies. Silicon Valley Bank had a lot of Silicon Valley companies in there, and so what happened is you had large companies pulling deposits, and if that's your customer base, you're not going to survive for very long. And that's what happened here, but it doesn't matter. People always look to the Big Four auditors. When a company goes under, people always sue the Big Four auditors. Why do they sue them? Because they have big pockets, because they're large companies. And they're one of the only large companies that work on businesses that go under that you can go after. A lot of time, like law firms, like these banks use law firms too, but these law firms aren't as Big Four accounting firms. And so you can't necessarily go after them. And the problem is these scenarios, the Big Four always lose. But are the Big Four going to stop auditing banks, especially regional banks? No, because it's especially in these regional offices, these are large clients, and there's a lot of regulation around banks. So there's a lot of work for the Big Four accounting firms to do. So they're not going to stop doing that. Now, is KPMG going to get off easy just because they followed procedures? No, people are going to sue them as a part of this. Regulators are going to come after them. They're probably going to have to testify in front of Congress. There's a lot of things that are going to come after this. And this is one of the reasons why E&Y wants to split up. And it's just like the regulation and the headline risk that you get by being a Big Four auditor. People always come after you when companies do poorly. And in the coming whatever we have, economic downturn, recession, whatever you want to call it, People are going to be coming after the big four accounting firms if companies start to fail. And so this is going to have wide-ranging implications, especially for KPMG. KPMG always gets hit with these things, and they just settled Carillion recently. And so it's just like, how many of these things can KPMG take a hit on? And the problem is the big four actually have accountants with specialties, with specialization in these areas. If we all just decide to say, hey, KPMG, reimburse everybody here, and KPMG, you should go under or split up, then what you're going to have left is accountants with less know-how, smaller firms, and they're going to do even a worse job. And you're going to have more questions as companies go out of business. You're going to have less competent auditors. And another thing that got brought up in all this is the audit rotation, which to me is ridiculous. People are saying that, KPMG audited these companies for 30 plus, 20 plus years. And it's like, the reason they didn't catch this is because they didn't rotate. No, that's not the case. We have audit rotation in Europe now. It's not as good as everybody thought it would be. It's just the nature of the game. And it's like I say, and if we really wanted to find out whose books are wrong or who's doing bad things, you'd have to get rid of conflict of interest. And the most time people think, when they think of those things, is they think of government doing the audit. They often picture the big four accounting firms as an arm of the government. And if they don't view them as the arm of the government, they're saying, why don't we have the government do this? Well, government auditors would be even worse, and they would take more time. Just look at the IRS. The IRS takes forever to complete their audits. So we're stuck between a rock and a hard place for the time being. And unless management lets the big four accounting firms in every meeting in real time and view transactional detail in real time and view bank balances in real time, you're just not going to know this stuff. Like the big four accounting, like KPMG didn't have access to depositors, to deposit information as the run was going on. Otherwise, they probably would not have issued the report, or they would have done something else. But that's just not. Businesses have confidentiality, and they have the right to confidentiality. An audit isn't knowing everything about the company, even though that's what people think. People think that auditors view every single transaction, every single thing that the company does, and that they just sign off saying that everything in this company is good. But that's not what an audit is. Unfortunately, the lay person, the average person in society doesn't care, and they're going to want to blame the big four accounting firms. But it'll be interesting to see what comes of this. It'll be interesting to see what additional regulations come out of this, because I think that's also a possibility. And then I'm still going to make fun of Deloitte's CEO saying there's no reason to split up. But I think after this, and if there is a downturn, more companies will be questioning whether they need to split up. And I think splitting up will... The reason the big four accounting firms, I view, should look into splitting up is because it will be seen as doing something for the regulators, to get the regulators off your back, at least a few years, maybe a decade, and then another move can be made. Because these regulators, society is always going to be blaming accountants for what goes wrong when companies go out of business. And you always have to do something political so that society can view you as doing something good, and so that they don't try to regulate you out of existence or regulate you into a branch of the government. So that's my view on what happened with KPMG. There's going to be more that comes out of this. There's going to be more that comes out of future scandals. There's already tons of scandals in Europe too that are affecting both EY and KPMG. There's a scandal in China with Deloitte. All these scandals are always ongoing, and they always have various impacts on the big four accounting firms, and we'll be tracking them here. So make sure to subscribe to this podcast and check out the show notes for useful links. Thanks for listening.